Welcome to another Tuesdays with Gary. I'm Gary Lanham. I'm the team leader of the Gary Lanham Group at Coldwell Banker Fort Lauderdale Beach office. And today I'm really enjoying the opportunity to be with Donn Rubin, who's someone I've done real estate with for probably the last 15 years. I've been a realtor for 16 years, and I started with Atlantic Properties, and I met Donn at Atlantic Properties. And my career, I followed his career. And Donn, welcome. Thanks for being with me today.
Thank you, Gary. It's a pleasure to be with you today.
So have you ever done one of these kind of broadcasts before, Donn?
Not with someone else, by myself, yes. So this is a big treat.
So great. Well, hopefully it'll be an enjoyable experience. We like to have a lot of fun, and we try to convey, we like to drop some education knowledge on our customers. And so first of all, I want to start with, how are you dealing with this COVID environment? What's it been like with your personal life and also your business life?
Well, first with business, it's been a challenge. As you know, none of us in this industry have ever experienced anything like this. And it's really a credit to the Fairway organization and our CEO, Steve Jacobson, that he's kept 7,500 employees calm and proactive, and he's been absolutely transparent. So every day things are changing just a little, and we're right there ready to make those changes and close those loans.
So tell me about personally, what are you doing to keep yourself entertained so that we don't have a Groundhog Day every day?
Well, personally, I'm doing fine. I'm working from home, being very organized, spending more time with my cat, who I love. And the only little thing that's difficult is not having all the machinery and all the monitors to do everything in a better, faster, more efficient way. But I'm managing, and I'm very grateful that I have my health and that I can still work and put people into these homes.
Yeah, it's really great that real estate has been deemed an essential business, and we've certainly been busy. We were hit in March. You know, we had like $3.75 million worth of deals lined up, and in March we closed 1.75. So something happened. 30%. We had a lot of people really nervous, and they utilized that inspection time frame to get out of the contract, not based on the condition of the house, but the condition of the economy right then. Did you guys have a similar experience in March?
We did. And so many loans fell out with the big banks that either couldn't do them anymore or didn't want the risk. And we've really been jammed. And with all of our teammates working from home, we have done record numbers year to date. And I've been a big fan of yours because I can see how you've gone virtual. You're doing virtual open houses and tours and still having these closings and listing properties. So I'm impressed with that.
Well, Donn, I learned from you, and I really appreciate continuing to learn from you, and I'm going to learn some more today. So, so we know that the market is back. We know that it's vibrant. You know, there were a lot of naysayers in the market at first, and especially in March when they were saying like, oh my gosh, you know, is this going to mimic what happened in 2008, which is a whole different kind of story because that was a banking issue. We don't have a banking issue now. We have a public health issue. And what is that? How is that going to affect prices? And you know, only time has kind of given us the experience to say that the prices really haven't been that impacted that much. One of the deals that fell out for us in March was this beautiful home in Hollywood Lakes, and basically it was listed at $750,000, and the contract fell apart. You know, it's just everybody got scared. Perfectly good home, appraised, no problems. And we decided that we were going to just keep it on the market. You know, Coldwell Banker leadership says life events drives real estate. Keep all your listings active, keep them on the market because you don't know what some buyers' life circumstance is. And we want to make sure we're ready for the buyers. So I'm proud to tell you that we went back into contract on that house. Gosh, I believe it was on Friday. Monday was our inspection. We're good to go. We've got a closing set up. And of course, those sellers now require, they're going to be buyers. So Eileen is out with them today, actually looking at additional properties. They're downsizing, and they're going to get something a little bit smaller that's easier to maintain. The one seller is quite the landscape designer. That's similar to like Louisiana. And so you can imagine what that yard looks like. But we're seeing that the market is well and good. So there's so many things to talk about with regards to COVID. And maybe we can take our first slide, Chitachi. And by the way, we have Chitachi Egwu from Mediascope, who's our videographer, who is handling all of our slides, and she handles all of our videography needs. She also runs a wonderful program on Wednesday on technology and media, and it's called Mediascope, and it starts at 6 p.m. every Wednesday. So if we have the slide, Chitachi. So I couldn't help but start with this kind of slide with, everybody has to wear a mask. You're outside in Fort Lauderdale now, it's mandated that you wear a mask. And so I wanted to do the same thing with being on the bills the currencies that we use, because it's an uncertain time with regards to doing business, an essential business at that, but doing business with real estate. And one of the things that I learned early on, because Coldwell Banker has been having weekly meetings from our management, keeping us updated, what to do, how to show a house, what's the latest precaution we have to take into account to show a house, and we've learned a lot. But one of the things that really stuck out in my mind was Tim Singer, who I think is just a stellar agent, came on with some advice. He says, look at your expenses. See what you can carve out on your expenses. Look at your credit cards. What's reoccurring? What are your reoccurring bills on the credit card? Are there magazine subscriptions, for example, that you could eliminate? Are there ways you could downsize your cable bill? Are there ways to downsize your car insurance bill? And so the essence of that is look at your expenses so that we can actually save money. And as I've reiterated to my team, saving money is just as important as making money in these days, because it's like giving yourself a raise. So I'm sure in your business it's the same thing. And if we can go to the next slide, we'll see that we always have to look at basically what's going on in the market, what kind of decisions the consumer is having to make. So money comes in, money is saved, and money goes out. So as the money comes in and the money is saved, I know that a lot of my customers, I've been doing this for 16 years, and it's incumbent upon me as a professional realtor to call my customers back and to not only find out how they're doing, how they're dealing with COVID, how they're dealing with their business life, how they're dealing with their personal, but are they able to save any money based on their real estate needs? And Don, that's where I think that you come in so handy here, because we want to talk about refinancing today. Can you give me an overview as far as what the refinancing business looks like today?
Well, you just hit on probably the number one product going. Fairway has done a record number of refinances in the last 5 weeks. And rule of thumb, I'm finding in the state of Florida, that anyone with an interest rate of 3.75% or higher should look into refinancing, because rates are low. They're hovering around 3%. I expect them to remain low throughout this year and even the beginning of 2021. So it is a perfect time to refinance. There are some different guidelines that have come up during COVID-19. So a lot of the refinances are in line to be triggered when the client's ready. For example, the client may have lost their job temporarily through no fault of their own. The minute that comes back, we can go forward. So we have a lot of refinances lined up, just as you were saying about your listing. You didn't cancel, you kept it on, because before we know it, little by little, things are opening up and it'll be full steam ahead. But refinances, absolutely. Rates have never, ever been this low. For example, VA rates are down at like 2.75. So perfect timing now.
So I want to kind of sidetrack that refinancing to something that the government has allowed us as homeowners to do. And I want to talk briefly about forbearance, because I'm an advocate of forbearance, because forbearance simply delays a payment, but maybe you can talk to me further about what that does to the mortgage holder's credit, Don. What happens when a forbearance goes into place?
Gary, I'm so glad you brought that up because I've done a lot of videos and emailings about forbearance. Unlike 2008 and 9, when forbearance was just for people who could prove a hardship, this time around it's been opened up to everybody. And most people, including myself before, thought this was for free. There was no cost to it. But I can assure you there is a monetary cost to it. Simple example, if you had a $250,000 mortgage at 4%, and your lender let you put this forbearance on the end of the loan, that means you're missing 12 months of amortization. And if you were to live in that home for 10 years, when you go to sell, the cost of that forbearance would have been $6,500. And also equally important is anyone that takes forbearance now, even though the lenders say they will not report it on the credit report, it's already been reported in some cases. You will not be able to do anything to your mortgage for 12 months. So I urge people that don't truly need a forbearance to not do it. Those, of course, that have lost their jobs, their income, and are forced to do it, I'm very happy that it's an option for you. So that's the down low on forbearance.
No, and that's a really good down low on forbearance. And the other side of it, of course, is like I've had some customers say, "Oh, I've gotten this gift that I don't have to pay my mortgage," and I don't want anything to happen like happened in 2008 when people weren't paying their mortgages for various reasons, of course, when we had the recession. But because once you get behind on that mortgage payment, it is so difficult. It is so difficult to catch up on it. So let's go ahead. I'm going to present another slide, and we're going to talk more about refinancing. And Don, I'm going to get you to talk about this slide after it's presented. Chitachi, if you could bring the new slide, I believe it's number 3. Now, are you able to see it, Don?
Yes, I see it.
Okay.
I see it.
So let's talk more about the refinancing aspect and basically what this diagram explains for us, so we can educate our customers.
Okay. You ready for me to go?
Ready for you to go.
Okay, with refinancing, things are very sophisticated now, and there's no one size fits all. That's why, as a mortgage advisor, I give options. Obviously, a good reason to refinance is rate and term. You have a higher interest rate, you're going to get a lower interest rate. Add to that equation the possibility of cash out. Pay up credit card bills that are much higher interest, because with rates where they are now, it's pretty much free money. So there's the cash out part. We always have to remember about the loan to value to avoid PMI, private mortgage insurance. But that's not black and white anymore either, because with PMI, if you have good credit over 700, 720, and you can buy a single premium, the PMI can be negligible and allow you more cash out, or even the ability just to do rate and term. So you can save money on the interest rate. There are better terms. You can do cash out. Don't be afraid of MI if it comes up, but the goal is to provide many options to the borrower.
So it sounds like what you're saying is that even if I don't have enough equity in my house, such as 20 or 25%, and I'm still paying a mortgage insurance, that I still have the option of refinancing?
Right, because if we look at that bottom line payment, even with the mortgage insurance, and it's saving you money from your current payment, then absolutely.
So Don, so tell me about this. As the rates were going down drastically, right? As the rates kept going down, everybody was saying, "Oh, the mortgage rate's going to always drop." The rates were going. What was really happening in the market? The rates were going down, and the mortgage rates, as I recall, were kind of going up. They were easing up. Can you explain that phenomenon?
I can explain it, but it's very complicated, and it's really something that loan officers, realtors, and the general public were never privy to in the secondary market. And what it boiled down to, especially with the refinance, is that there was more demand than any lender had infrastructure. Because in a normal year, there's about $2 trillion in refinances. All at once, there was demand for 11 trillion. Then what happened when the Fed started lowering rates? The secondary market became affected because all the lenders that service loans, whether you have forbearance or not, they have to make a payment every month to that investor. And there were margin calls. So a lot of lenders, because of infrastructure and their cash flow and their hedge funds and their warehouse lines, could not afford to do all these loans. Now throw into the mix, never ever happened before, you have in the secondary market, Fannie, Freddie, and the government, Ginnie Mae, not guaranteeing they'll buy these loans. So this has been unprecedented. And
so that's kind of a catch-22 right there. And that kind of leads me to my next question. The customers that I have talked with, before I'm able to direct them to you, they say, "Oh, I'll just go to my bank. I have my business account is with whether it's Wells Fargo, Bank of America, Bank United, whatever. I'll just go to my bank and I'll start this whole refinance period with them." And the feedback I've gotten from my customers is that, wow, that's a lot of work and it doesn't happen very fast. So can you shed some light on what's going on with the lenders direct versus going with the mortgage broker?
Well, yes, I will try. With the major lenders, currently they can be out to 120 days on a loan. Now, you as a top realtor, and you've been around long enough to know, when you present an offer or receive an offer that says 120 days, you're not going to love that offer. Throw that into the fact that these banks have one product. So if your client doesn't fit that product, there's nothing else to offer them. Then I've been doing this 42 years. I just received a loan that came from Chase where the loan officer told them things that weren't true at all. And I looked the loan officer up and he had been doing it for 3 months. And before that worked at Best Buy. So it's never been more important to know who you're working with.
So it's like doing real estate right now. It's like the benefit I have of being Caldwell Banker is that we're the number one realtor in Broward County with 55% market share. So they train their agents and they have more experience for them. Is that it's the same thing in the mortgage industry. You got to find somebody that's experienced, is on top of the market, and understands all the fluctuations within a market. So I know in some of our discussions, Don, I probably talk to you about 3 times a week, if not more. I apologize if I pester you, but I'll call you and I'll ask you about interest rates and what the trend is. And we've had a couple of days where we talked where the rate was different at the beginning of the day till the end of the day. So what's going on with that?
Yeah, rates are all over the place. There just isn't the appetite from the investors like there were. So they're being manipulated in a way they never have been. And it takes a lender that really is strong with cash flow and can afford to take these loans, even if they don't sell. So it's very important who you work with now. And I know you know that. And when you make an offer, you want to know that that lender on that piece of paper, that pre-approval, is going to come through in the time frame you need it, and that your borrower needs it.
So I want to circle back to something you just said there, because I think it's important. I want to make sure I understood it correctly. So the typical process, the mortgage gets sold, right? So the loan closes and it's sold off to the market, mortgage-backed security, right? Did I just hear you say that there's some people like your company that can actually take those as in-house loans?
Yes, absolutely. And for example, when this first started, the first thing to shut down were jumbo loans. They just stopped. even with loans in the pipeline. Now, I would say almost every lender just canceled those loans and the deals died unless the borrower had cash. We did not do that. We took those loans, paid for those loans, and we did the right thing for each and every borrower.
So let's go back to some underwriting criteria then. So I can't imagine that you're going to take every loan. So you're going to have to use your own in-house underwriting guidelines. And they're going to be your most creditworthy, the people that have the assets, the people that are most likely to pay that loan. That would be my assumption. Is that correct?
That is correct. And we haven't really added any of our own guidelines, just strictly Fannie, Freddie, and Ginnie. And they're minor. But the most important thing is one of the first questions I ask, especially with the refinances, did you do forbearance? Then my next question I ask is, when your loan closes, your first payment is going to be in approximately 45 to 60 days. Do you plan to make that first payment, or are you going to go into forbearance? So there's some new conversations we're having now.
Yeah, an unexpected conversation. You have a mortgage. Do you plan to make your first payment, right? Interesting concept. I just want to kind of I'm looking at, we have a watch party going on, and Eileen has asked a question. So basically, do you have portfolio lenders, or are you actually able to act as a portfolio lender? Try your mute button, Don. Try your mute button.
Sorry. We are a direct lender. The things that have gone away portfolio are the non-QM loans, like the bank statements, one day out of bankruptcy or foreclosure, asset depletion. Those are gone. But we still have other loans that we can portfolio that are unique loans, reverse mortgages, foreign nationals. And just today, one of the investors for the non-QM, the bank statement program, has just come back effective today. So every day is something different.
So I just want to take some time out to kind of welcome the people that are with us right now. Michael Sobel, who is the one of the owners of we have a nice business relationship with him. Welcome, Michael. And you would know him, Don, because he's great friends with Jay Ganem. Welcome, Victor Bunkos. Welcome, Eileen Mulkey. Mark Blissett from Dallas is in the house. So, Mark, welcome to Fort Lauderdale. I lived in Dallas before moving here, and I can't wait to meet you. I know Paul, and look forward to seeing you guys. We see Derek Buford is in the house from the Gil Borden Group. We see Linda Donahue is in the house, high school with, another great realtor in town. Roseanne Birch is in the house. We've got Amy Eisman in the house. We've got Quinn Martin Dolan in the house. We've got Carlo Arroballo in the house. And we've got Andrew Verdi in the house, David Rumford, Robert Shipley, Richard Smith, Harley Garza, Charles Robinson, great to see you. George Andrews, great to see you. Gustavo Torres, Gil Rice, thanks for joining us, Gilles. Daniel DiCarlo up in Buffalo, New York. He's coming down here soon. Chuck Janadas, Jerry Grace, Pilar Barone from Madrid. And let's see who else I got here. And then I've got Martha van Hinsbergen has just joined us, and Michael Council has just joined us. Thank you so much. I do have another question before we move on, Don, and that is from one of these people that are in the house. And he says, am I a candidate for refinance? He joined after you had given your initial spiel. So if you would just maybe restate who's a candidate for a refinance right now.
Yes, of course. Thank you for the question. Anyone that has an interest rate of 3.75% or higher is a candidate. And I had mentioned, don't be afraid of loan to value. And if you don't have enough equity, because mortgage insurance isn't as scary as it used to be. There are workarounds with great credit, single premium. So yes, if your interest rate is over 3.75, you should look into that.
Who would have ever thought having an interest rate of 4.0 it might be a good deal to recast your mortgage and pay even less money, right? I would have never thought that in a million years. I have a 4.0 mortgage now, and I remember that my first mortgage was 12%. So I think I'm like, sitting on cotton, 4% mortgage, I'm paying nothing cost of money, and now it's even cheaper. So such great points to bring up. So Don, we're going to continue going through the refinance model that we've been talking about, and I love these little side conversations, and thank you for allowing me to interject some things. But it all kind of starts with a credit score, and if Chitachi, if you can get ready for slide 4, and Don, if you can kind of tell us about what you're seeing in the market in terms of credit scores, and I know that with some people losing their jobs, or certainly with people where they've been cut back on their hours or taking pay cuts, that credit scores can come down. I have a customer, for example, that called me and says, I had a 750 credit score, and now my credit score is 700. And I referred this customer to you, and maybe you could explain the mechanics of what's really gone on with this customer, because I think that affects a lot of our homeowners right now, and they need to understand how those scores are being recast and what we can do to help them build those scores back. If you wouldn't mind spending a few moments there.
Absolutely. The one thing I'm extremely grateful and proud of is that Fairway has its own in-house credit department. And even though when I pull a credit report, I can see the possibility of how many points can be gained and what can be done, the credit department at Fairway can even go deeper than that. So credit is so very important. It dictates rate, mortgage insurance, and even when you go shop for a car, your loan, your home insurance. The biggest thing people do that's a mistake is when they're trying to clean up their credit, they start closing accounts. That's a mistake because you're closing accounts that add to your high available credit. So you're actually making your credit score drop. In these times, there are some things that can't be helped. With the forbearance, with delaying things, you have to stay on top of it, because I know when all of this brushes off, we're going to have bowers where these vendors reported things incorrectly having to do with forbearance and delaying payments, and we're going to have to fix that. Luckily, in the lender's world, we can get it fixed instantly with a rapid rescore. So
I'm going to stop you right there, and just going to ask Chitachi to bring up that rapid rescore, because we want to set you up for this correctly, because I think that since you guys have that in-house capability, it's important to really stress this and what you can do for the consumer. The homeowner who already has a house and needs to refinance it, you get a lower payment.
Correct.
So your rapid rescoring process, how long does that normally take, Don?
Well, these are great questions. Rapid rescore usually took 1 to 3 days. With what's going on now and the demand, rapid rescore is out to about 5 to 7 days. But still within the time frame to close a loan between 21 and 30 days.
Great. Well, I know that basically people are very interested in getting the loans done, and basically the next slide kind of talks about, which is slide 6, Chitachi, talks about how much equity do I need to refinance, Don? How much? What are you looking for from an underwriting standpoint, an equity position?
Ideally, it would be nice if you have at least 20% equity, because that would allow for all the closing costs to be rolled into the new loan, the ability, if you wanted to take cash out, still stay under 80% and avoid PMI, private mortgage insurance. But let's say you have to go up to 85. If it's an FHA loan, it can go even higher. Do not be afraid of PMI. The bottom line is, if the new payment is less than the old payment, you're saving money.
Great, that's good to know. So I think we're ready for the refinancing process now, which is slide 7. And we're going to display that. And Don, we're going to ask you to take a look at that slide. And if you could kind of walk us through the process and what the homeowner needs to do to get started as far as the refinancing program with you guys.
Okay, fine. Well, of course, the first thing is the most important, because the motivation dictates what options should be presented. And then you go to having paperwork. Really, more than the paperwork, at that point, all the docs should be presented so that there are no surprises. You've already have the lender, the appraisal is ordered, and just keep in mind, depending on the loan program and the amount of equity, we're seeing a lot of appraisal waivers now, not needing an appraisal. And even if you need an appraisal, there's all new rules in place that sometimes prohibit an in-house appraisal. We start the loan process. It goes to setup. We at the point that it is conditionally approved. This is brand new guidelines since COVID-19. Once it's conditionally approved, that means maybe the appraisal isn't back or clear title. That's when it can be locked, not before. Prior to that, the day of application, it could have been locked. Now we need conditional approval. And like I said, we have many in line that are either looking for a certain rate we haven't hit yet, or their job has been eliminated temporarily or cut back and they're not ready yet. So they're standing in line. Then we have final approval. Of course, with refinances, there's a 3-day right of rescission. So on closing day, it will fund. And if you get cash back, you'll get your cash after 3 days. How's that?
So let's talk about that cash back situation. I tend to be a little bit more conservative financially. Do you have an opinion about the cash back during this kind of situation, or should I really be looking for saving money based on my mortgage alone? Do you have what's your position now, or what has your experience been as far as seeing the types of people asking for cash back during COVID?
Well, Gary, it really depends on the borrower. If it's retirement age, then cash back can be a powerful retirement tool and help you create higher net wealth and ease into Social Security and disbursements. It all depends what you're going to do with the cash. I mean, if you're going to blow it on a car or a trip and raise your mortgage a bit, I wouldn't advise that. But if you're paying, say, $800 a month, and you can get 35,000 out, and your payment is still 800 or 805, and you invest that, spread your risk, you save that money, then I'd say that's a win-win. And borrowing money at 3.25%, I don't know where else you can do that.
Yeah, you can't do that. I mean, that's like the cost of money is so low, it's ridiculous not to use it. And other people's money is what we oftentimes call that. Use other people's money instead of. So I just want to take a pause here to kind of welcome some other people that have joined us since we last did a shout out. John Johnson, welcome, and please give Spencer in Greenville a big hello for me. Ed Chassie has joined us. Alexis Lopez has joined us. Faye Roberts Miller from Virginia has joined us. Saeed Wolf, who keeps us entertained with his bike rides around Fort Lauderdale, has joined us, and Steve Bryan has joined us. So, Don, it looks like a no-brainer. If your mortgage rate is more than 3.75, 3.79, then you should definitely be considering a refinance. What happens? So everything's happening in my business different. Everything's happening in your business is different. And we're going to have Eileen Mulkey, who's an appraiser, on an upcoming video chat, Tuesdays with Gary. But just briefly from your perspective, the lender perspective, talking about appraisals, what happens when the appraisal is ordered, and what types of appraisals are now? Because are they different? Do we have to go in the house? Or what? How are they actually done right now, Don?
Excellent question, Gary. They're different depending on the loan program. Right now, for Fannie, Freddie, and Ginnie Mae, if the appraiser or the seller are not comfortable with going in the house, they can do an exterior only, perhaps a drive-by or a desk review. On a refinance, if it's cash out, they must be able to do the appraisal. So depending on the circumstances, that could delay it. And then don't forget, depending on how I put the program together, I've been very successful in getting appraisal waivers, which is the best of all possible scenarios, because many times the refinance and the cash out is very dependent on what the appraisal comes in at. So new rules for appraisals.
New rules and appraisals, and we'll have Eileen join us, and maybe we'll bring you on that discussion as well. But it sounds like we've handled refinancing pretty thoroughly today. We're going to come back to you again, Don, and we're going to talk about loans in general, first-time home buyers, and we're also going to talk about that favorite thing, if you're 62 or greater, of which you can tap into the equity and get rid of your payments and decide what you want to do with the money. And those loans are called, Don?
Tax-free income, and they're called reverse mortgages. And I would love
tax-free income reverse mortgages. Thank you for that. So,
I'd
Don,
love the opportunity.
So how do you feel? Have you ever done? So this is your first one doing it, being interviewed on a live Facebook Live. How did it feel to you?
I love it. I didn't realize it was going to be so natural. This is great. Thank you for having me.
We've been with the Gary Lanham Group, and this is why we're continuing to list and buy houses for our customers. Don, you've been so great today. It's been wonderful to see you. I saw you earlier at another meeting that was using Zoom and not StreamYard. And Chitachi, as always, thank you so much for your help. You've guided us through this process. We really appreciate it. And Don, I will talk to you soon. Thank you very much. And everyone, I'll see you next Tuesday. Thank you.
Thank you, Gary. Thank you.